Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half. Let's take a look at what's moving the broader market this morning. Over the weekend, we had confirmation of the Phase 1 trade deal between the U.S. and China. The Phase 1 deal, which will increase China's imports from the U.S. and other countries, as well as remove tariffs on Chinese goods in phases, is expected to be signed during the first week of 2020. As previously disclosed, Phase 2 negotiations are expected to begin shortly. Let's take a look at our first chart of the day, the Nasdaq 100, which is minutes into Monday trade. The index is trading higher by nearly 0.7%. It's relatively quiet this week as markets wind down for the final trade of the decade, with just 3 Nasdaq 100 companies reporting this week, including CTAS, Citrix, Micron, and Paychex. Our next chart, Micron, it's one of the most heavily traded stocks on the Nasdaq 100, and investors will be paying particular attention to the company's gross margin when it reports after the close on December 18th. Gross margin is important for Micron because data storage products are effectively commodity goods. Being able to maintain margins by keeping down production costs is especially important. The higher the gross margin, the more a company can reinvest for future growth, and that's like what we like to see on the Nasdaq 100. From the Nasdaq market site in New York City, I'm Jill Malandrino, global markets reporter at Nasdaq.